Hey, Bulls and Bears, it is Monday, May 30th, 2022. Thank you so much for joining me here today. And I apologize in advance about some noise you may hear in the background. Certain little people that are usually in school are not in school today because of the holiday. So hopefully it won't be too bad. But to start with, I think it's important to remember Memorial Day is the federal holiday that in the United States we mourn the U.S. military personnel that have died while serving in the armed forces, and it's observed on the last Monday during the month of May. And I think it is important to remember that here in the United States, even though things are getting harder financially for a lot of people, and most people are under some sort of debt, compared to some other countries, we still have a much higher standard of living. So, something to be thankful for. And an especially warm welcome today to anyone that's had a family member or known someone or even had a friend that has died in the line of duty for the U.S. military. Now, let's go ahead and get started here. We've got a lot of information to cover today. Now, speaking of the cost of living and debt, let's start off right here with what Peter Schiff put out recently. He said, quote, oil just hit $117 a barrel. It looks like the market is poised to finally reflect a Russian sanctions premium that should send the price to 150 per barrel by the end of the year. Next year, the price could easily hit $200, but don't worry, America's super strong economy can handle it. Let's focus on this last line here. America's super strong economy can handle it. So if our economy here is so strong, like they're telling us, then $200 a barrel should be no problem, right? We have a strong economy. So think about this. When they say the economy is strong, do they mean the average U.S. middle class consumer is strong? Or what are they talking about? Please let me know what you think down in comments. So if it is true that we have a strong economy, then great. Bring on $200 a barrel oil. It shouldn't matter, right? And when we hear a phrase like this, a strong economy, what does it mean to you? Please let me know what you think down in comments. To me, what it should mean that the people of America, the working people, the ones that actually get things done, not the ones sitting up in their suits in an office somewhere, the working people that get their hands dirty, that do the actual labor, the working people have a very stress free life financially. But that's not what we're seeing. We're seeing a lot of financial stresses in the population of the working class of America. And we see it in the levels of depression. There was a study that just came out that said Americans are not getting enough sleep because they're so stressed out financially. It's being a big part of it. And Axios just put out an article on this that gives us some pretty alarming numbers. And let's just look at some of the numbers right here. 1 in 3 American adults don't get enough sleep, defined as 7 or more hours of sleep per night. And going back to the 1940s, people got almost 8 hours of sleep a night. Now it's about 6.8 hours of sleep a night on average. Now, I think the financial aspect of it and the debt that people have is part of it, the financial stress, as we call it here. But back in the 1940s, when people got almost 8 hours of sleep a night, there wasn't as many distractions. People didn't have tablets and phones and all this entertainment at the touch of their fingertips. Here's one example. Just a few nights ago, I fell asleep listening to music on a streaming service. And every time I would hear a song, I would think of something else I wanted to listen to. So then I would go search for that. And then I go search for another song. You have millions of songs at the touch of your fingertips. And just that distraction can really make somebody not get enough sleep with such entertainment available like it is. Now, some people may think that it's all distractions and entertainment causing Americans not to get enough sleep. Well, if that's the case, then why is 70% of Americans take at least one prescription medication? And I really do think that there's a connection here. I think with the worsening levels of debt and financial problems, that people get more anxious, more anxiety, more stress in general, and less sleep. And now in the US, with the savings rate plunging, things could likely get a lot worse for Americans, and people that are losing sleep are going to lose a lot more sleep. So, bottom line, be careful out there because a lot of people may be behind the wheel, driving when they shouldn't be driving, more exhausted, more stressed on medication. And it could get a lot worse out there as the economy begins to erode even worse. And there's even an article out here, right here, out of Fox Business. Consumers haven't been this worried since the financial crisis in 2008. The personal savings rate as a percentage of disposable income fell to 4.4% in April, the lowest level since 2008, according to the Commerce Department. Total savings slipped to 815 billion. For some, the decline is a red flag for consumer spending, which accounts for 70% of GDP in the US. And consumers are feeling the pinch. In a recent University of Michigan Consumer Sentiment Index study, it fell over 10% in May to a reading of 58.4%. That's the lowest since August 2011. The recent drop was largely driven by continued negative views on the current buying conditions for houses and durables, as well as consumers' future outlook for the economy, primarily due to concerns over inflation. Now, it's not all bad news because we are seeing prices come down in certain areas. We talked just our last report about how automobile prices have slipped since the beginning of the year, ever so slightly. They're still way up year over year. But here's another recent example. Lumber prices slump with rising interest rates. Lumber prices have fallen more than 50% since March, when the Fed began raising borrowing costs to slow inflation. Now, combine this with the fact that the housing market is slowing down also because of higher mortgage rates and more potential home buyers waiting on the sideline, especially because their savings rate is dropping so rapidly, and the potential for more investors to back out of purchasing homes. This housing market could see a shift later this year. Now, anything could happen. They could reverse their interest rate decisions and start dropping rates again. But if things continue the way they've been happening since the beginning of the year, we could start seeing some buying opportunities. So, bottom line, try to stay out of debt, stay ready for buying opportunities, try to have some cash available. I know it's difficult right now with the cost of fuel, the cost of living. These utility bills are skyrocketing in most states. And I know there's a lot of people that I see here on this channel that have been holding on to cash, waiting for a better buying opportunity, whether it's homes, whether it's automobiles, holding on to cash, for those big investment opportunities. Other people went out and leveraged themselves to the max because they figured that these prices were never going to ever come back down. And that's something I don't advise, going all in. Yes, it's okay to make a purchase because you think the prices might go higher, but if you go all in and don't have any cash left over, you're not going to be able to scoop up even better deals if and when the correction is to come. And hopefully we'll see some corrections in some asset prices here later this year, as more and more Americans get pushed towards the financial edge, so to speak, and bankruptcy's knocking on the door for so many people. And it could be a combination of rising costs and falling costs. For example, gas prices could continue to rise, but then maybe we'll see a correction with the cost of vehicles, with the cost of homes, and we might see kind of a mixed economy with rising prices here, falling prices there. But either way, it's going to get very interesting, and going to continue to get more interesting as we go. So please let me know what we think down in comments. How are you preparing? Are you holding cash? Are you on the edge financially? Are you losing sleep because of finances? Do you think that's what the problem is with Americans losing sleep? And what do you think about what Peter Schiff said at the beginning, which we highlighted, where he says get ready for $200 a barrel oil? Well, if the U.S. economy is strong, then we can handle it, right? Your thoughts down in the comments, please. Thanks for being here, everybody. Bye for now. Peace.